Holy moly. So I decided I had to do something to make myself feel better, to make it seem like we had lots and lots of money after this crumbling, what the heck is this? Crumbling crisis of a stock market. So I went to the bank and I got a big old bundle of cash. And I'm like, yeah, that'll make me feel good, right? But I'm so broke now. They only gave me a bundle of $2 bills instead of like hundreds or something cool. Look at that, all $2 bills here. That's all I could get now. Yeah, welcome back to the greatest entertainment on earth, the stock market. We are about to set or close below the 0% on the QQQ fib. QQQ is literally down 4%. The next catalyst this upcoming week are obviously going to be weighing on the market substantially. Today, I was hoping we would see some form of a rally before the end of the month, somewhere between, say, the middle of this month to the end of this month. We didn't get anything, nothing. I mean, it's just like one day it's, NASDAQ's up 3%, the next day it's down 4%. It's like, it taketh what it giveth. But anyway, it also does seem like it's selling into the close, which usually, and we know this, we have institutional selling going into the close, funds taking out their their outflows, essentially, or covering their outflows. It is interesting that we did bounce perfectly off the 0%. You have to admit, that was a pretty, and this is a minute chart, I get it. That's a pretty freaking perfect bounce right there on the 0. But, now we're about to close below it. There's always a chance that we can pop up and get back to that 318 line before the close. But, dude, we got 11 minutes left. Like, it was bad when we broke trend in January. Now it looks like we're going to break trend again. We'll see what happens. Anyway, so let's look at some of the emotional damage from today. First of all, Tesla went red. Also bounced off of its 880, which is a very strong level for Tesla. And we're slightly below that right now at the 876. You have this really interesting dynamic now where like one stock will drag everything down. Last quarter, that was Netflix. Netflix was sort of the standard bearer for just disaster. This quarter, and I mean since then, like, Netflix has gotten reamed. A lot of stocks have gotten reamed. But now look at this. Amazon used to be considered a cash play, a play people would put money into as a safety escape. And I mean, this is just insane. 15.12% for Amazon. Who would have ever thought that Amazon would move 15% in a day? That's normal for, like, you could see, well, I shouldn't even say normal. That would be a lot for Tesla, right? Tesla with its $900 billion market cap. Amazon is a $1.25 trillion market cap. I mean, this thing used to be worth, I don't know, a third more. So it almost used to be $2 trillion. It's absolutely crazy. I mean, it is just pure flames over here today. So look at that, Amazon. And then obviously any of our risk plays, right? Monday, Cloudflare, Toast. Cloudflare is about to be lower than we were in the depths of despair in January, which is like totally freaky crazy. Stocks are tanking as what's being defined as, quote, Amazon's worst day since 2007. Traders are now pricing in odds of a 75 basis point hike in June, as opposed to just 50 Nifty, the Nifty 50 here. Nope, 75 BP hikes. Oh, this is interesting. The FBI searched data of millions of Americans without warrants. That's going to lead to a firestorm on Twitter. Yeah, okay. So then we've got, look at this. I mean, Etsy, $93, down 8%. It's just like pure evap over here. Affirm is down at $28. Wayfair. Who remembers when Wayfair would always go to like 300 and then like 330, and then it was like 300 and then 325 and then 300 and 340, and it was just like this thing would always rubber band back to 300. It was like a joke. Well, clearly it was a joke because now it's $77. Jeez, man. Don't worry. The fire is transitory. The pain is transitory. Arca penny stocks in. This is bad. Oh my gosh. You know, what's going to end up going down is like the best ETF ever is that right here. It is the inverse of ARC. Oh my God. Like it's so bad. So bad. Wow. Yeah. All right, let's keep going down the list here. So, wow. Snowflake 172, Redfin's $11. Lemonade's sitting at 20. 186 for Nvidia, despite totally like amazing and smashing, dare I say, earnings at Nvidia. Complete destruction. Then you've got Qualcomm, amazing earnings, down 5.49%. You just can't fight the Fed. You know, this is why we pay attention to the Fed so much. You have to. You can't win. You can't win when you've got a Fed that's like this. This is, I mean, unless you have shorts and puts. Which institutions do have a lot of. In fact, what we should do is we should do, you know how we used to do this? We used to do the short interest updates. Those are good, you know? Short interest updates, those are always fun to look at. Let's see, we should do that again. Actually, it'd be kind of fun to look at. I mean, I occasionally look at it, but I haven't put it up on the channel in a while. Well, I'm just going to verbalize it now. But anyway, this is just crazy. It's like, when does the market close already? It's like, okay, 6 more minutes. Okay, it can't fall that much more in 6 minutes, right? Yeah, it can. Roblox down 4.3%. Holy moly. Gee whiz. Apple 3.82%. Wow, Apple. Oh my gosh. Google down again. Look at that, back under 2,300. Home Depot down at $300. And this is insane. DWAC's up though, you know. Leave it to DWAC to do insane things. For some reason, people have cash. I was speaking to the gym teacher at school working. He was talking about how he's surprised how much his checking account has increased the past few years. Yeah, well, a lot of people don't invest in markets, right? You know, they saved a lot of money from the staying at home for a year and a half, stimulus, right? Wage increases. Wow. Tesla short interest sitting at 2.9%. Let's look at ARK. ARK short interest sitting at 20.27%. Dude, that's where AMC used to sit. Okay, ARK has a higher short interest than AMC. Like, what? Okay. Well, it's been a good play. Microvision, almost 26%. Holy smokes. Short interest on Lemonade, 37%. Short interest on DWAC, 13.81%. Tattooed Chef, short interest is 28.99. Virgin Galactic, 25.78. Let's look at Disney. Only 1% short. AIPL. 0.63% short. Let's try the SPY. SPY is 16% short. It's gone up. QQQ is 12% short. Palantir, 6.59% sure. SFT, I don't know what the ticker is for Redbox, 25.89 on Shift. Crash the stock market, people lose jobs, and inflation goes down. It's true. But then don't worry, you'll just be fighting the transitory recession. Too many warehouses have led to Amazon's net loss. That's interesting. 3 minutes left in the day. I don't think it could come soon enough. Holy crap. QQQ is about to have its lowest close this year. Down 4.66%. We're right there. Look at that. All the way right here. Yikes. Tesla's almost down 1% right now. Rivian down 6%. Yeah, there you go. Impeach the Fed, right? Mattel and Pinterest calls. Wow, hopefully you closed them. Pins, yeah. Pins about 3. Mattel also down a little bit, but they had a pop on earns. Yeah, no earnings today. Well, let me double check that. Usually on Fridays, everybody's like, get me out of here. It's just kind of funny because the market's doing so terribly. It's like, yeah, please do get me out of here. Yeah, there's no earnings today. Let's see what Sarah's got to say about this. What do you have to say for yourself, Sarah?
You to the downside internally, as you would expect to see or maybe would like to see. As you see right there, it's less than 6-1 negative to positive volume on the New York Stock Exchange. You want to see maybe 8 or 9-1 to really say people have sprinted out of this market. I mentioned the mega cap stocks have continued to be the main pain point. Look at the equal weighted S&P against the standard market cap weighted one on a month-to-date basis. Now, both down significantly, but you have about 3 percentage points of advantage from the equal weighted one, which, of course, is something you can own through an ETF. The volatility index spiked back up. It's tried to kind of crack below 30 a few times this week and make another spike on the chart. Not quite there. We're going to go out into the weekend at the highs. Typically not a bullish thing. I would want to point out, though, Sarah, remember last Fed rate hike meeting in March? Market was awful going into it. It actually had a buy on the news response once we got the hike.
See what Powell says this time next week on Wednesday. Down 995 points here with less than a minute to go into the close. United Healthcare, Goldman Sachs, Microsoft are the biggest drags. It looks like we are ending the month of April, which was a brutal one for long investors, on a very strong down note right now, down 3.7% on the S&P 500. NASDAQ 100 down 4.5%. That will cap off the worst month for the NASDAQ since October 2008, the depths of the financial crisis.
Wow.
NASDAQ Composite down 4.3%. And the Dow going out with a loss of 980 points or so. That is going to do it for me here on Closing Bell. Have a good weekend, everyone. I'll send it into overtime to pick up this breaking coverage of the sell-off with Scott Wapner.
Look at that.
All right, sir.
Insanity. Absolute insanity. Look at that. Straight down right there. That is a close under the that is a close under the our fib over here. We did have this before over here on the 26th, a couple days ago. We got down to 311.88. So we're actually higher than the low we had on Tuesday. That's actually kind of interesting. Let's look at the SPY here. SPY going into the close. You know, a couple little tick ups there. But that's it. What a crazy into really the month here. But boy, oh boy, Amazon ending up 14% down. It's so much wealth destruction so quickly. These are stocks people think are safe. There's no safety in this market. There's no hiding. Unless you're maybe in the wheat ETF. Let me see the wheat ETF. No, wheat ETF was down today as well. If I go to the day chart here, yeah, wheat ETF is really consolidated. You know, it really hasn't done, like if you bought into the wheat ETF, you would have had to catch it early. I first pitched the wheat ETF on the channel at $7.60. I wish I bought it then, but I did pitch it on the channel. I go, this is probably going to do pretty well. It would be nice because it was probably had a nice 40% in it, but it's stable. It's been stable at that. But hey, you know what? That's the thing. You don't want to look at the woulda, coulda, shouldas. That'll drive you nuts. Don't look at your portfolios if you're long. 2.78 on Dave & Buster's. I'm still sitting at $45 though. Still actually pretty good. Like Dave & Buster's, that's not bad performance. Unlike Redfin here at $11. Like you go to the day chart on Dave & Buster's, like if you were all in on Dave & Buster's, you're actually not doing so bad. You could have gone all in on Dave & Buster's in the depths of the pandemic at $10 or whatever. Back when I was pitching this stock. I was seriously concerned that they were going to go bankrupt, though. So I ended up selling out of Dave & Buster's. And the executives were talking about trying to do like live radio shows, I remember, at their stores. And I'm like, you guys are total morons. Why don't you put the games outside and like charge people to do hacky sack outside in the parking lot and like sell beer? Like that's a smart idea. Like you can do radio, like have like live radio shows or whatever inside. Like that's dumb. I'll never forget that. Obviously, the stock ended up performing actually quite well, which sometimes shows you the difference between just like the way momentum can either depress or support a stock versus what actual management is doing, right? That disconnect. But anyway, wow, crazy. Well, hopefully this is just the kind of pain that we're seeing before our major catalyst next week. Remember, folks, this is actually the same thing that we experienced in March. Remember, go back to March. Okay, let's do that for a moment. Take a look at this. March 8th, which was right before the Fed meeting, was the same freaking story, folks. Right here. Look at that. It's the same pattern. March 8th, 1 week before the Federal Reserve meets, what do you get? Massive pain. When do you get your next low? The day before the Fed meeting. And then everybody bought like crazy after the Fed meeting. Like we got our rate hike and then everybody's like, all right, that's over. Let's go back to partying. And then we got this crazy rally. Hopefully we repeat that, right? Yeah, March 14th was it's March 8th and March 14th are basically exactly the same thing that we're seeing right here. Almost the same thing. So hopefully we repeat the up and not the down. Anywho, appreciate y'all being here, folks. Thank you so much, and we'll see you in the next one. Good luck out there, and do keep in mind, if any of this is depressing, your sponsor for today is life insurance. You can get in as little as 5 minutes by going to metkevin.com/life. In fact, it's the same life insurance that I Apple Pay for every single month with Lauren. You could Apple Android Pay for. Really simple. You don't have to do a doctor exam. I don't know anybody who's had to go to the doctor. Just metkevin.com/life. Make your life easy and protected. Goodbye.